Supermicrocomputer Inc., or SMCI, breathed a sigh of relief as it narrowly avoided being delisted from the Nasdaq stock exchange. The company achieved this by filing its delayed financial reports, sparking a 12.2% rally in its stock price. However, this reprieve does little to address the underlying issues that plague the company. SMCI remains embroiled in legal and regulatory challenges. These issues, coupled with concerns about its financial reporting and competitive pressures, paint a murky picture for the future. SMCI's recent stock performance resembles a roller coaster ride. The company's shares surged after filing the delayed reports, offering a temporary respite for investors who had seen the stock price plummet due to delisting fears. However, the rally proved short-lived. Concerns about ongoing investigations and auditor warnings quickly tempered investor enthusiasm. The stock price retreated, highlighting the fragility of the company's current position. Despite meeting the Nasdaq's filing deadline, SMCI faces an uphill battle to regain investor confidence. The company's financial reporting practices have been under scrutiny. Additionally, an ongoing investigation by the Department of Justice and the Securities and Exchange Commission adds another layer of uncertainty. These factors, combined with the competitive landscape of the server market, make SMCI a risky proposition for investors. The coming months will be crucial for SMCI. The company needs to address its regulatory and legal issues decisively. It must also demonstrate that it can navigate the competitive server market effectively. Until then, investors should remain cautious. The recent stock rally, while offering a glimmer of hope, does not necessarily signal a brighter future for SMCI. Despite filing its delayed reports, SMCI remains under the cloud of regulatory and legal scrutiny. The DOJ and SEC investigations into the company's accounting and governance practices are ongoing. These investigations, stemming from allegations of financial misrepresentation, pose a significant threat to SMCI's reputation and future prospects. While an independent committee found no substantial wrongdoing, the shadow of doubt lingers. This uncertainty could deter potential investors and business partners, hindering the company's growth trajectory. Adding to the regulatory woes are the concerns raised by SMCI's new auditor, BDO USA. BDO flagged material weaknesses in the company's internal controls over financial reporting. This red flag raises serious questions about SMCI's ability to accurately and transparently report its financial performance. It also casts doubt on the company's claims of addressing the issues that led to the delayed filings. The auditor's concerns further erode investor confidence and add another layer of complexity to SMCI's already challenging situation. The combination of ongoing investigations and auditor concerns creates a perfect storm for SMCI. These issues cast a long shadow over the company's future, making it difficult to assess its true financial health and growth potential. Until these matters are resolved, investors are likely to remain wary. The company must prioritize transparency and accountability to regain trust and navigate this turbulent period. The legal and regulatory challenges facing SMCI are not merely procedural hurdles. They represent a fundamental threat to the company's credibility and stability. Addressing these issues decisively and transparently is paramount for SMCI to move forward. Failure to do so could have severe consequences, potentially jeopardizing its listing on the Nasdaq and its long-term viability. SMCI's financial performance presents a mixed bag. While the company enjoyed robust revenue growth in fiscal year 2024, its future prospects appear less certain. The demand for AI servers, a key growth driver for SMCI, has slowed. This slowdown, coupled with the company's internal challenges, led to a significant downward revision of its fiscal year 2025 revenue guidance. This revision, a clear indication of the headwinds facing SMCI, has further fueled skepticism among analysts about the company's ability to achieve its ambitious long-term targets. SMCI's decision to lower its revenue guidance for fiscal year 2025 from an initial range of $26 billion to $30 billion to a revised range of $23.5 billion to $25 billion underscores the challenges it faces. This reduction reflects not only a slowdown in the AI server market, but also the impact of the company's delayed filings and ongoing investigations. These factors have undoubtedly hampered SMCI's ability to secure new contracts and maintain its growth momentum. Furthermore, analysts are increasingly skeptical of SMCI's ambitious revenue target of $40 billion for fiscal year 2026. This skepticism is rooted in the company's recent performance and the increasingly competitive landscape of the server market. The Zacks consensus estimate for SMCI's fiscal year 2026 revenue stands at a more modest $33.04 billion, highlighting the divergence in expectations between the company and market observers. SMCI's financial performance is inextricably linked to its ability to navigate the turbulent waters of regulatory scrutiny, internal control weaknesses, and a fiercely competitive market. While the company has demonstrated resilience in the past, its current situation demands a high degree of caution and a realistic assessment of its growth prospects. Investors should closely monitor SMCI's ability to address these challenges and regain its footing in the market. Despite the recent rally, SMCI remains a high-risk investment. The company faces a multitude of challenges, including ongoing investigations, auditor concerns, and a slowing AI server market. These factors, coupled with a demanding valuation and intense competition, suggest that the risks outweigh the potential rewards. Therefore, we recommend that investors sell their SMCI holdings and explore more stable opportunities. The recent stock price rally, while offering a temporary reprieve, does not negate the fundamental challenges facing SMCI. The company's legal and regulatory issues are far from resolved, and its financial reporting practices remain under scrutiny. Moreover, the competitive landscape of the server market is becoming increasingly challenging, with established players like Dell and Hewlett-Packard Enterprise aggressively vying for market share. While SMCI has benefited from the surge in AI demand, its ability to sustain this growth is questionable. The company's revised revenue guidance and the skepticism surrounding its long-term targets underscore the uncertainty surrounding its future prospects. Additionally, SMCI's premium valuation, as reflected in its high price-to-earnings ratio compared to its peers, leaves little room for error. In conclusion, SMCI presents a complex and precarious investment proposition. While the company operates in a high-growth market, its numerous challenges and demanding valuation make it a risky bet. Investors seeking exposure to the AI server market would be wise to consider alternative investments with a more favorable risk-reward profile. The potential for further downside in SMCI's stock price, driven by regulatory actions, financial underperformance, or competitive pressures, is simply too significant to ignore.